Welcome to BT Podcasts. In this episode, discover how indexed universal life products can empower high net worth families to navigate and future-proof complex wealth. This podcast is produced in collaboration with Sun Life.
Investors are showing increasing financial sophistication and a desire for greater investment control, especially since the economic and financial landscapes keep evolving. As such, financial solutions and products need to keep pace in order to cater to unique risk appetites and financial goals. Welcome to BT Podcast by the Business Times. I'm Howie Lim, and we have expert help today from Christopher Albrecht, CEO of Sun Life Singapore. Christopher, thanks for your time.
Hi, Howie. Thanks a million for having me here.
So I realized we need to start with some definitions. Give me your 1-minute elevator pitch of indexed universal life products.
Okay, start the timer.
Here we go.
So not everyone's going to be familiar with these products, and it's worth saying from the outset that they're generally viable for the high net worth part of the Singapore demographic. They're not really available in the retail.
Okay,
space.
bye.
The way these things work, they're a whole of life insurance policy. So we only cover death, we don't cover disability or anything else like that, and the policies run as long as the client lives. Underpinning that is a structured product where we put the client's premium into a tracker that follows the S&P 500. Now, what's special about this is when the S&P goes up, the policy value goes up. But if the S&P goes down, we protect the clients. So we have a floor of 0%, even actually a cumulative floor of positive 1. So the clients are getting the upside, but none of the downside. Now, there's a cap to that. But what it means is that when a client gives us their money and we insure them, they're also accumulating a value. So if they find they no longer need the policy at a later date, they can surrender it, either partially or totally, and hopefully the value will be significantly higher than what they put in day one.
And you are seeing a rising demand of these products, the IUL products, for particularly the multi-generational high net worth families. Because how does it help? Say they have really complex legacy planning, they have these wealth transfer needs, etc.
Yeah, I think there's an old adage, which is cash is king. And what we're doing with life insurance is creating liquidity when the matriarch or patriarch passes away. As to why families need that liquidity, it can vary. A couple of common scenarios that we see is estate equalization. So a lot of our clients are business owners, and you might find that the business is 60 or 70% of their net worth. Now, let's assume they've got 2 children. One of the children's going to take over running the business. The other one's gone off to be a doctor, a lawyer, a dolphin trainer, I don't know. But they're doing something else. Now, you can't give shares in the company to the child that's not helping run it. That doesn't work. So if you create a lump of liquidity upon your passing, it means you can leave your children 50-50 share of your wealth. So that would be one very common scenario. Another one we see is people who have really large property portfolios, and they might be leveraged. They might have mortgages on those properties. Well, if interest rates go up or property prices fall, and again, the wealth creator passes away, that injection of cash into the estate gives the family options. And it is all about options. Do they continue to pay the interest? Do they pay down the mortgages? What do they do? Ride out the storm? But cash gives you choice.
Kind of helps with the wealth accumulation aspect for high net worth clients and also the managing of risks, right? These new products?
Absolutely. So because you are actually creating value within the policy, you can see that bit of it as being wealth creation. Then, of course, you've got the liquidity on the passing of the life assured. So you're hitting 2 items at the same time.
What about, say, some high net worth clients or families are increasingly focusing on impact investing, charitable giving, giving back to the community as part of their legacy? How do these products or how does Sun Life help with this?
So that's a great question. It's something we do a lot of. A lot of our clients want to give back. And we're seeing that with every new generation that comes through. And I think the younger generations are a little bit more public about their philanthropic giving. But a lot of the large families will have a philanthropic trust or foundation set up. Now, if the charity said to them, "Oh, we'd love you to leave us $100 million, those individuals say, "I'd love to do that too. However, unfortunately, my family probably aren't going to like it if I leave all my money to charity." So what they do is they come to us, they segregate a small part of their wealth, so it could be $15 or $20 million, and we would cover them for the 100. So that allows them to segregate the money today, which is affordable for them. And I know the numbers I'm talking about are very large, but they segregate what's affordable to them, but the charities receive the much larger lump sum when they pass away. The other part of this equation is that Sun Life works very closely with Community Chest here in Singapore, and we give up to 0.5% of all premiums that we receive to ComChest to go out and help the needy in Singapore. We then get proactively involved in those good works, and it's something that we don't shout about, but it's worth mentioning. And so when we have clients that talk to us about philanthropy, we're already walking the walk. We're not just talking the talk.
Why so purpose-driven, though, this approach that Sun Life has?
At a group level, we do charitable work around the world and have done for over 100 years. The company's been around for 160 years. It's part of the values of the company. Doing the right thing shouldn't be something that you crow about. It should just be built into our DNA. And this year, I've also put in place an initiative whereby all of the team can give their time to charity and get vacation days in lieu. Because I think it's one thing to give money, it's another thing to give your time and actually be out there helping people.
All right, since we're talking about high net worth individuals and families and such, business succession plans was also something that you brought up a wee bit, because a lot of them, 60%, was it, of their net worth is in the business. So the succession plans can get quite complex, the wealth planning in that regard. With these IULs, how can they achieve that peace of mind and flexibility in case things change?
I think it's back to that point of cash is king. It gives you options, it gives you flexibility. So we can help these clients generate really quite significant liquidity upon the death of the matriarch, patriarch. We can't really help with how that money is distributed. Normally, these policies would be owned by a trust, as a for instance, so the family can decide who's going to get what money and when. But we're just creating choice by giving them the liquidity at the right time.
So liquidity specifically is what you're helping them out with. What about potential tax burdens? Hold that thought. We'll come back and talk about that in a bit. Also, how much of a role technology plays and the emerging trends in wealth management and planning. More with Chris Albrecht from Sun Life in a moment.
And now back to BT Podcasts in collaboration with Sun Life.
Welcome back. We're speaking with Chris from Sun Life. So we earlier talked about the IUL, the Indexed Universal Life products, and how they help with liquidity first and foremost, and also a lot of flexibility in that regard. What about potential tax burdens for the high net worth families in Singapore and even across Asia?
Sure. Singapore is a very benign tax environment. We all enjoy, a very positive tax treatment here on our investments and our insurance, but around the region, that can be very different. Countries like Japan, China, Indonesia, tax can be much higher. In most jurisdictions, I have to put the asterisk and the caveat there because every country is slightly different, but in most jurisdictions, the growth of assets underneath an insurance policy are tax deferred. It's very important to say tax deferred, not tax free. Because if you make a withdrawal from the policy, again, depending on your jurisdiction, that could be a taxable event. And upon death, also could be a taxable event. In most countries in Asia, upon death, any deferred tax on these policies is written off. So the full amount goes to the family, and it also bypasses probate in most countries, which means that money goes to the family really very quickly, normally within 14 to 30 days. So even if a client is using these policies for wealth accumulation, they're getting gross roll-up on the underlying assets because it is tax deferred until the point where they surrender the policy. So, yeah.
In English, that means they get it all.
They get it all.
Okay.
Yeah.
What about technology and data analytics? We're hearing so much about that. How does it play a role in, say, personalizing those IUL solutions? No one family is created equal or same as another, right? Because they'll have unique risk appetites, their financial goals, etc.
So technology is an interesting one. And I think in these days of AI, everyone thinks this is the great panacea to all of our problems. The way I see it is there's two sides. There's the client side and advisory, and then there's us as an insurance carrier. So what we're seeing a lot, and especially with Gen Z, is people are going to AI to take advice on what should I do. So they'll be typing in there a huge prompt of here's my situation, my family situation. Hey, Gen AI, tell me what to do. Now, that's all well and good, apart from Gen AI doesn't always get it right. So you can't stop people doing that, but I would always suggest that they take professional advice. And there's a lot of very, very high quality brokers out there that represent us and other insurance carriers who have been doing this for decades, and they really understand the ramifications of structuring these products in the right way. So I think that's the client side. So technology is very useful, but it's not the be-all and end-all. On our side, we use technology and we're starting to embrace AI, but very, very gently, very carefully. We always have to check its homework. Now, we could use it to do data analytics, project mortality events, so we know when we might have to pay out on a client's death. And that enables us to then alter our pricing so we can give the clients the best possible price for any level of risk.
That sounds good. Think about upcoming trends, emerging trends and such, because wealth planning is probably evolving just as quickly as technology is. The role of this IUL product, that needs to evolve as well. What are you seeing coming up?
So I mentioned earlier on that the key underlying asset for most, if not all, IULs is the S&P 500. Now, recently, some of our competitors have started branching out and putting other indices in there. It's not something that Sun Life is comfortable with right now. These things are generally quite unproven. There was a period in the US many years ago where these alternative indices were tried and it didn't quite work. It doesn't mean we won't do it in future, but we're going to be looking at it very, very carefully. As you mentioned, evolution. If we get a lot of demand from clients who say, well, as well as the S&P, we want the Hang Seng or we want the MSCI World, sure, we will look at it. Some people want precious metals. We'd look at anything, but it's got to work. It's not a case of, oh, it's a shiny thing, let's follow the market. We've got to march to the beat of our own drum and do what we think is right for the client.
Why cautious? Because it's also uncertain economic climate. What's going on?
The economic climate is always uncertain. Always uncertain. So for us internally, we're just a cautious entity. Most insurers are, but I think even in the realms of insurance, we are really quite cautious. We've got to ensure that we're here for our clients when they make a claim, and that could be 50 years down the line. So we have to ensure that anything we do has always got an eye to the caution, the longevity of our products and our solutions. I think, interestingly, we can also use the uncertainty principle when it comes to clients, which is you might have clients who are professional investors and they're making lots of money today in this phenomenal bull market. What happens when that turns, right? Insurance can be treated as the ultimate hedge, right? If it doesn't matter what happens to my portfolio, at some point, I'm not going to be here anymore. And if I can guarantee my family get an additional 10, 20, 100, $200 million, whatever it is, then fantastic, I've got that peace of mind.
What's next then for Sun Life? World domination. I understand you're unifying your business across Singapore, Hong Kong, Bermuda, etc. Why?
So the three high net worth parts of Sun Life, as you mentioned, Hong Kong, Singapore, Bermuda, have always worked very closely together. But what we've had is in each country, you'd have your own underwriters, your own actuaries, your own operations team. What we're going to do is turn the 12-hour time zone difference between Asia and Bermuda into a bit of a superpower. And it's going to enable us to operate on a 24-hour basis. So for instance, maybe we're underwriting a case for a client. That case may arrive in Singapore at 7 p.m. My underwriting team are going to look at me and say, boss, really, we want to go home. And I'm saying, absolutely. Let's pass that case over to our Bermuda office and let the underwriters there look at the case. Now, they couldn't give the actual final decision, but they can do a lot of the work. The next morning, when the team come in Singapore, that work's been done. This enables us to do things so much faster than we have been before, but also faster than our competitors. And a lot of the time, being the first out the gate, the clients are going to look at you and go, wow, this is efficient, this is slick, I like that. So that's one of the key reasons we're doing it.
If I had 500 million, I would come to you, Chris. Sadly, I do not. Chris Albrecht, CEO Sun Life Singapore. Thank you so much for your time.
Thank you very much.
This has been BT Podcast by the Business Times. I'm Howie Lim.
This episode of BT Podcast was produced in collaboration with Sun Life.
Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.